Measuring a nation's income through income method. Let us look in our example of bread in the video of measuring nation's income through output method, in which rupees 25 of material, assuming flour to be only material, are used up in producing a loaf of bread that can be sold for rupees 35. However, remaining rupees 10 is here called income, which is not the profit of the baker on this unit of production. Suppose for 1 unit of bread, salary wage is equal to rupees 2, government sales tax is equal to rupees 1, depreciation of oven and other equal to rupees 1.5, interest cost equal to rupees 1, baker's profit for 1 unit of output equal to rupees 4.5. The amount received by farmer and miller can also be distributed to the basic factor of production like labor, land, capital and organization. In this way, corresponding to the rupees 35 value of loaf of bread will be found rupees 35 of income made up of wages and salary income, interest income, profit income and related type of taxes known as indirect tax. Whatever has described here for baker could in the same way be described for the miller and the farmer. Once having established was to be included as income, we need not concern ourselves with the income generated by the production of any one loaf of bread, by all loaves of bread combined, or even with the income generated by whole of the baking industry. We may turn directly to industry as a whole. The immediate purpose is to estimate from the income side the value of the whole economy's output of final goods and services. Estimate of the total of wages and salaries, interest, business profits and other income are to be compiled. The income method of calculating national income takes into account the income generated from the basic factor of production. These include the land, labor, capital and organization. And rent is the money you pay for the use of land while calculating income. Rent refers only to the income earned from using any land. Compensation for labor. Compensation includes salary wages that you earn in exchange for the services and skills that you provide for producing goods and services. It also includes travel allowance, bonus, accommodation allowance, and medical reimbursement. Remuneration in the form of social security schemes such as insurance, pension, and provident fund is also included. Interest on capital refers to the charges you pay for using borrowed capital. For example, the interest paid when a company takes a loan for an investment. For national account purpose, we consider only the interest paid by the production unit. Profit for organization refer to the money that organization make while producing goods and services. Companies distribute the profit they make by paying income tax to the government and dividend to the shareholders. The amount that is left over after paying tax and dividend is called undistributed profit. Similarly, depreciation costs are also a part of income by the present definition, but a part retained by the firm and in fact set aside for possible. One more term has been introduced called mixed income, which refers to the income of the self-employed individuals, farming units and sole proprietorship like self-employed people, doctors, chartered accountants, consultants, etc. National income can be represented as GDP at factor cost equal to rent plus compensation of employees plus interest plus profit plus mixed income, which is equal to GDP at market price plus subsidies minus indirect. Precautions of income method. Transfer income like scholarship, donation, charity, old age pension are transfer payments and are not included in the national income. Billion rupees received by persons who sell buildings, automobiles and other second-hand goods produced in an earlier time period are not included. However, any brokerage or commission on sale of such goods by brokerage or commission agents will be included. Billion of rupees issued by persons who sell stocks, bonds they own will not be, as these financial assets are mere paper claims and claims change of title only. These are simply financial transactions. Income received by persons from other persons for which no productive service is rendered, it's called transfer of. Income from lotteries, horse race, etc. are not included, as there is no productive activity connected with them. Imputed value of owner-occupied houses on own capital production for self-consumption will be included, as these are productive activities and add to the flow of goods and services. Payment like death duties, gift tax, wealth tax, etc. are not included in the national income, as they are paid out of wealth or past savings and do not add to current flow of goods and services. Thank you.